Hi, Pius. You're welcome to the session.
Thank you. Thank you.
All right.
Sorry for the delay, technicalities.
It's okay. Thank you. All right. So you're welcome to the session. And today we're talking about taxes. And let me just give what my pain points are as a person, but I'm sure people are going to raise them. There's a Q&A section and there is a chat section. And Pius is an expert around the areas of tax, and he's going to be able to take us through some of the issues we may have in terms of taxes. And as a person who runs a small business, before I met Pius, I was very confused about the entire taxation system and afraid of it. Literally afraid of URA, literally afraid of growing my business. But after having enough conversations with Pius, I'm much more comfortable. I cannot run away from my tax obligations because being able to understand them has been powerful for me as a person. And also when we speak so many times in the business environment, especially at Girls for Girls and the Women Entrepreneurs Forum, one of the biggest issues is taxation and how we can manage tax. Then also, there's a lot of change that is constantly happening in the areas of tax. And that's why we are here today. So this year, we have also had a lot of tax changes, new things that are coming up constantly. Pius, I hope you keep up with the changes in the tax space. So he's going to be able to help us be able to understand highlights of what we can actually do this year, because the year has just begun. We're in July. So the businesses that run from July to June, we are in the right place because we are able to understand what we can do with our businesses between now and next year in June, so that we have to have a starting point as a business in terms of where we are going to start clean and fresh. So you're very welcome, Pius. We have 1 hour for the session.
Thank you. Thank you so much. Like I said,
and that also includes the Q&A, the questions. Yes. So please take it on. I am going to be supporting with the chat and the Q&A. Thank you.
Thank you, Madam Primera. I'm glad to be here. I delayed a bit due to technicalities, but I'm glad that our topic today is about understanding our tax obligations. Yes, we have different taxes, but when it comes to taxes, we all have similar agenda and a responsibility to fulfill as business owners or as directors or CEO. I know there will be a number of questions. I don't know if we will answer the questions as we do the presentation, or questions will come later.
I think we can take them right after, but what I'm really interested in is adding the questions to the Q&A so that even if we're not able to answer them now, you can get back to everybody later. So please.
All right.
Please put in your questions, and
okay, thank you. Thank you. Let's go straight to our obligations as the business owners and as directors. Number one, before we go to our tax obligation, do you love your business? Do you like your business? Do you have passion for your business? If you don't have the passion of what you are doing, there are high chances that you are likely even to default and do the responsibilities as required. If you don't have a passion for your business, please find the business you love, because I am sure you will do better in that kind of business that you have the passion for. But the main obligation we have to start with is to register your business and make sure that it has a TIN number. Registering for a business is different from registering for a company. So a company is a business, but it's registered as an independent person. It survives on its own by legal interpretation. It's a person on its own, and it is supposed to have an independent TIN number. So when you are registering your company, it's different from registering a business name. And when it's a business name, you are supposed to use your individual TIN, you as the owner. So meaning all the taxes will be paid through that individual TIN, which is your personal TIN. So many people asking me questions that they have been having a business and they want to register another TIN for another business. And mainly you find it's because of the taxes, or someone has defaulted and wants to run away from this TIN to another. But the bad news is your individual TIN cannot be changed. You have to maintain your personal TIN if you are to have registered businesses, or else register a company. A company, you can have different TINs as possible. But if it's an individual TIN, it must be specifically on your personal TIN. So first responsibility is to register your business. Make sure when you are registering your business, you know the type of taxes that you are supposed to pay. We have different taxes, and not all these taxes are applicable to your business. You must understand the type of business you have registered, and all those business, all those taxes are always recorded or put on your TIN. When you log on your portal, you will find that the taxes applicable to your TIN are also indicated there with their effective date, so that you know your responsibility of which tax to pay and which tax not to pay. So, do we all have business TINs, or our businesses registered? How do we register these businesses? You must start from your SB. After getting your certificate of registration or certificate of incorporation, which is for the company, and for the business is certificate of registration. After getting those registration details, you use them to get a TIN from URA. When you complete that process, then you are able to say that your business is fully registered. That's one main important thing, to register your business. Now, after registering your business, you have to pay and file your returns. Some people always ask me that what kind of return am I supposed to file? Which tax am I supposed to pay? That's because you registered your business and you don't know the type of tax you're supposed to pay. But the mandatory tax that you must pay when you are a business person, it's income tax. This one is compulsory. Unless you are running a charity organization or an NGO and you get exemptions through revenue authority. Otherwise, you must pay income tax. That one is mandatory. You cannot run away from it. So make sure you file your returns and pay in the right time. What is the right time for paying your taxes? We have different times of paying our taxes depending on the type of the tax that you are going to pay. If it's like income tax, you can pay 2 or 3 times or even more, depending. There is what we call provisional income tax. This is the assessment. You make your self-assessment and estimate, I am likely to make this turnover or this revenue in this year, and I will not wait at the end of the year to pay. Let me pay in the middle of the year. Make your self-assessment, pay some money. Towards the end of the year, you might see that the business has grown and you have made a lot of revenue and you need to amend that provisional tax and add some more money. The point here is the government will not wait for you to first finish the year and then you pay income tax, because it is always running the government. The money is supposed to run the government every day. So you are expected to pay during the year, not necessarily at the end of the year. So that's why this provision of income tax is always required, and you are supposed to amend as many times as you want. So this is income tax payment in advance, which is mandatory, and most businesses are getting assessments because they are not doing the right thing. They end up filing only the final income tax without making these provisions, and there is a heavy penalty for not making or paying in advance this income tax. For other taxes like the payee, VAT, these are monthly. These are monthly payments, and you can pay them every 15th of the following month. For example, this is supposed to be paying the taxes of VAT, payee, and others not beyond 15th of this month. So meaning we'll be paying for last month. So it will be a deadline on 15th of this month to pay for last month, which was June. If you don't pay, and if you don't file in the right time, an interest will start accruing, 2% interest every month for the delay in paying. If you don't file in time, 200 shillings is charged as a penalty for not filing your return in time. So always take note of your responsibilities of when to file and when to file and how much to pay. Time will not allow us. Maybe I can also explain briefly about some of these taxes. Like when we talk of withholding, withholding has been a very big issue. Most people don't understand about withholding. Withholding, I want to put it in a layman's understanding so that you understand it fully. Withholding tax, this is the tax they withhold from you when your customer is paying you and is a licensed or a gazetted tax agent of URA, is supposed to withhold 6% on your goods and services you have offered. And that 6% they withhold from you remains your money. They will deposit it to URA and it will go directly on your account as advance income tax paid. Usually when we pay withholding tax, we always forget to know that we have paid income tax in advance. People always don't understand this money is your money until you make a declaration or you file your income tax at the end of the year. And if you file your income tax at the end of the year, if you are supposed to pay 10 million and they had already withheld from you 10 million, that 10 million will compensate for the income tax. So always know that withholding tax is your money and it is always reflected on your ledger when you check on URA portal. Now, who is supposed to be withholding this withholding tax? Every year, the government issues out a list of companies that are mandated to withhold that money from different businesses. And the essence of doing this is to make sure that business people, especially those small taxpayers, somewhere deep there, who don't always declare income tax, this is the chance and the opportunity the government uses big companies, large taxpayers, and medium taxpayers, even some compliant taxpayers, to collect that money on their behalf. from those small businesses who don't always declare income tax at the end of the year. So to the government side, if you don't declare income tax and they have already withheld that withholding tax from you, it will serve the purpose. The government at least will benefit something from you, even if you don't file your income tax at the end of the year. So that's why there is this withholding tax, which gazetted companies are authorized to collect on behalf of URA. So if you are not exempted, you have to accept, and they withhold from you this money and they remit it to URA, because they know sometimes you might default and fail to file your income tax. Now, some people always don't understand this withholding tax, and you find they are approaching us, asking us that we should go and claim this money back to them, especially if it has accumulated. Sometimes people take long to check on their age, and by the time they check, they find they have 200, 300 million, 400 million of withholding tax money on their account. And of course, they have the right to withdraw, to request for a refund of this money, but there is a process to get this money. Like I said, it's your money if you are tax compliant. First of all, you find someone who wants to get a refund of this money has not been filing income tax. So how do you expect now you are able to process this money to refund it back to you? The process is, before you request for any refund from URA, it's your right, it's your right to request for a refund, and usually URA refunds people their money, especially VAT and income tax. But are you tax compliant? My advice is you should always first make a thorough check of your records, audit yourself, see if you have done the necessary things. And after that, you can request for your refund of the money. I am sure your money will be refunded. They have done it to several businesses. But the bottom line is, if you register and you request that you want your refund, the first thing you will do is to make a thorough audit of your books. See if you have been defaulting, if you have not paid somewhere here and there, then they deduct their share and you will take the balance. So you should not always have a feeling that the URA will always take your money and you cannot get it back. If you qualify to get back your money of withholding tax and VAT, you get it. And the fact that now everything has been streamlined, URA has improved greatly on their system. They have implemented and introduced a new system that is really easy and helpful to all our taxpayers. And the beauty with it is that whatever you see when you log on is exactly what they are seeing as well. So there is no hiding any information on their system now. So we have to take advantage of this new system, especially to monitor our progress, to monitor our transactions with URA through checking these ledgers that we share with URA on the URA portal. Because if you don't keep on checking them, you will not be knowing how you are faring with your URA. So it's also your obligation to keep making a thorough check of how you are progressing, the kind of transactions you are doing, so that every time you are reconciling between your books and the URA books. It's not hard, and it's easy to check, see your ledgers on URA portal and how you are faring. All the types of transactions are there, and you can be able to view them. Now, After filing and paying your taxes in time, you still have another obligation of making correct declarations. What do I mean? If the financial year has ended, you have to declare all your sources of income or revenue, and you declare all accordingly. Sometimes people always make mistakes here when they are declaring their revenues to URA. They declare less. And they forget that when they are declaring less, already URA has third-party information, and they know you have traded here and there, and you see them giving you assessments. So always make sure you declare all your revenues and you pay the right tax. How do you usually, how do you think that people always get assessments? People always get assessments through wrong declarations. And how do URA know? Through your income tax return. Income tax return is the most sensitive return, and a bit tricky and hard. And I always advise that if you are not sure, or if you don't know, you should not gamble in filing income tax. You should be a professional, because after filing this income tax return, it has a lot of requirements that you have to fill in there, and you don't just dump. You have to think, you have to be reasonable, because each figure you put in there, it must be supported and it must be defended. Should they ask what is this composition of this figure? What are the supportings of this figure? You are supposed to bring evidence of all those figures that you put in your income tax return. So it's not a return that everybody can try to file and gamble about. It will bring bad consequences. So making correct declarations simply means, if we have different sources of income here and there, bring all of them, declare them to URA. Deduct all the expenses. If we have expenses, deduct all of them, stay with your profit. It is only the profit that is charged where you pay your income tax. If it's a company, you will pay your 30%. If it's an individual like these small taxpayers, presumptive taxpayers, those ones, they pay very, very small money, very small. I always tell taxpayers to always know where they are supposed to be classified, because if you are a small taxpayer, you have your cash shop there, you are a beginner, you don't need to declare to URA balance sheet, profit and loss. No. If your revenues are just 10 million and below, you are not supposed to pay income tax. You are still a survivor. That is the threshold that our government put, so that you first grow your business and become somewhere or reach somewhere, then you start paying income tax. So if you are paying income tax and your turnover is 10 million and below, you are not supposed to be paying that money. And if it is between 10 and 150 million, there is the way you are supposed to pay. Still, you will not declare your income or tax, profit and loss, statement of changes in equity, or that stuff. You are free to do it if you want, but a small taxpayer, there is a schedule that is followed where you pay accordingly, and you find you are paying a little amount. So when you are going to file your taxes, always make sure that you are properly classified and you are paying your taxes in the right group. If you are belonging to a presumptive taxpayer, pay like a presumptive taxpayer and benefit from the stress of filing and declaring where you need a professional and find it is costly and unnecessary. Presumptive taxpayers, you only make a payment and it serves as a return. So always know where you belong and you benefit from the rights you have. When you don't declare properly, I have told you, it is very hard to hide. Sometimes you are not declaring all your revenues, and URA has already received notifications from different customers that you have traded with them. Or you have purchased from different people. They have declared what they have purchased from you, but for you are going to declare less, when the other side have already declared to URA. So that third-party information will always expose you to URA. So it's always important to file and declare all your revenues accordingly to avoid these unnecessary penalties and assessments. Number 4, which is very important, is to keep your records. It's really very, very important. We always have a lot of challenges when you are called to go and audit someone in the field or to provide tax advisory, and you find someone has nothing. They have no records. So how do you expect someone to file your income tax when you don't have any records? Number 1, having no records is going to put your business at a very, very big risk. How will your come and assess or determine which type of taxes you're supposed to pay if you don't have records? If you have records, I'm telling you, you will not fear URA at all. Even if they say they are coming tomorrow and you have your records, you know they will speak for themselves. Why do you fear them? If you have records and you have declared properly all the declarations, records will speak for themselves. If you don't have them, it means you are at the mercy now. URA will be at liberty to give you any assessment they want, because you will not defend yourself. You cannot defend yourself verbally. You must have supporting documents. You must have records that will speak for themselves, even if you are there or not. And these records, I always remind you and most taxpayers that you are supposed to keep them for at least 5 good years. Before 5 years, you cannot say, for me, I don't have records. They got lost or they got old. You have to make sure that you keep them very safe until 5 good years. After 5 good years, there you can have excuse and you are tolerated. And in 5 years, of course, the tax body will have also got the time, if they are interested, to come and verify and review your transactions. So make sure that you keep your records for at least 5 good years. If you don't have them, that is trouble. If we come for income tax and we find all your records there, then you are easing our work. But if we come and we find you don't have any records, it means I'm going to spend too much time on your work, checking here and there, toiling up, adding up things, and I will charge you for my time. And in the end, you find it is expensive for you. So keeping records is very, very important. There are some of the common mistakes that we always encounter, and most taxpayers always don't mind about them. and they end up costing them. And I might go through some of them, the most common ones. And I will start with the where business owners mix their personal finances with the business they are doing. You find the owner of the business uses the money from the company. He or she starts, starts like a piggery business, his personal business there, and he doesn't want to declare any revenue that comes from that side, and that side keep on eating the finances of the business. Or getting money from the businesses, you start making parties. Those are your personal things. Like we said, a business is independent and it is supposed to be employing you, the owner. If you get money from the business, it means you have borrowed from the business. You are supposed to take it back. If you don't take it back, for us, when we are coming to review your transactions, that's where you always find people saying that the trial balance is not balancing. Why? There was a debit, there was no credit, or there was. So if you have a business, make sure if you are to borrow money from the business, tell your accountant or make a record and say you have borrowed from the business this amount of money. It might be a loan, you have got a loan from your business. It doesn't matter if it is interest-free, but make sure you put it back. Otherwise, you are bringing a problem to someone who is going to file for your income tax. You are bringing a problem between you and URA. At the end of the day, there is no way you can balance your transactions because some money is not being accounted for. It is being used in outside and personal things. So whatever you are doing, you know, whenever you use that money for your personal and you don't record it, the burden will remain on the business and it will be hard to balance your transactions when someone is filing your income tax. And also, it will be hard to explain to URA when they are estimating your tax obligations. Two, another common mistake. Some of us, especially those who have rentals, you declare your rentals that you have like 2 units or 2 houses, and you pay the small money, which is okay. But now, all of a sudden, you are going to buy large assets, big assets of big amounts of money. And you know, these days, when you are transferring your assets to your names, especially business assets, like commercial houses, you will be required to pay stamp duty. When you pay this stamp duty, it means URA has been notified this person of this thing has bought a building of 400 million, of 200 million. But remember, you always declare that your source of revenue, your rental, you only pay 300 every year. So where did you get this money to buy all this commercial building? What is the source of income? You find now you are inviting URA to come and cross-check. It means you always have other revenues and you don't declare. So whenever you are going to transact, using your TIN number, always first think twice, always first seek guidance from a professional person, because whatever goes through your TIN, you are accountable. Whatever revenue that is declared on your tin, you must be paying taxes on it. Otherwise, you will find you are getting assessments unnecessarily. And it's hard to keep on hiding away from these taxes, especially where transactions go through your tin. Another mistake I am seeing, a common one, is where most businesses, especially small businesses, they think that they cannot use FLEs or they cannot generate an FLEs invoice because they are not VAT registered. That one is very wrong. Sometimes you have clients and they are insisting that we want an FLEs invoice. And you say, I am not VAT registered, so I cannot give you. Why not? You will generate an FLEs invoice. It will come as an e-receipt instead of a tax invoice. If you are VAT registered, it comes as a tax invoice. If you are not VAT registered, it comes as an e-receipt. But the rest are the same. The other one will show the VAT tax. The other one will not show the VAT, but they are all FLEs generated invoices. And the beauty is that if you keep on using your FLEs, even if you are not VAT registered, it helps you to keep your information very safe, especially all your transactions of revenue. So don't always refuse to use the FLEs because you think it is for only VAT. It is for VAT and it is compulsory for VAT registered people, but also those who are not VAT registered, you are free to use the FLEs. And it is very helpful to our businesses. And another thing is that when we are filing most of your income tax returns, you always find that very few of your purchases have gone through in FLEs system. A few you find they have gone in the FLEs system, and the big number of transactions, they are not through FLEs. This one is becoming a big problem. All your purchases are supposed to be generated from FLEs, especially if you have VAT. If they are not through FLEs, it will be hard to defend. You are supposed to be giving accountability of all that money that you have spent and not through FLEs. And remember that your purchases of 5 million and above, you must deal with people who have tin numbers. If someone has no tin, desist from dealing with them with big transactions of 5 million. If you do that, then that expense is not recognized. When it comes to tax computation, it will be thrown away. So try to practice your business dealing with people that are having tin, that are VAT registered, especially if you are also VAT registered, you benefit a lot. Also, some of the taxpayers have been dealing with, they fear the tax body like nothing. They fear URA. Yes, as a licensed tax agents, we are supposed to be a go-between between you taxpayers and URA, but where possible, there are some things that you can even explain better to URA. But we find in most cases, they don't want to visit URA for any clarification or to make a direct contact and talk to them. And I always find it not good. URA staff, they are good and they are very approachable. They are really professional these days. Very professional. They listen and they help where possible. The challenge maybe could come where they use a different language, they talk of tax things, and you are not knowledgeable in the tax. And that's where you require our services for better interpretation. But otherwise, for this daily communication, you have to be understandable and reach out to them for any clarification. Because I know they are really very knowledgeable. Sometimes you find you have been given an assessment, you are feeling annoyed, you are really hot, you are annoyed, and you feel talking to them, you can easily quarrel. That's what you have to avoid. Because if you quarrel, they know where they will get you. So you have to resist the urge of fight fire with fire. It's not good. You should let the knowledge and the understanding be your guiding light when you are trying to get information or talking to URA. You have to maintain your composure and professionalism so that we communicate fully with URA. They are not people to be feared. They are not hostile. They are professional and they are hungry to help us. For us, we are always there with handling your tax issues, and for sure, they are very knowledgeable and very helpful. We should not fear them. Another big mistake I've seen is people registering for a business. After registering a business, they don't get a TIN. They keep quiet. You registered a business with the Uganda Registration Service Bureau, but it has no TIN. If it has no TIN, it means you are not fully registered. Your business is operating, but it is not paying taxes. If it stays longer that way, expect assessments from URA, and these assessments will go to your TIN, you as a director. So if you register your business, your company, go ahead, get its TIN and start complying as soon as possible. Otherwise, you, the director, you are going to have a big burden on your shoulders. And remember that all directors, we are also supposed to be filing our income tax as individuals outside our businesses. The businesses employs us as owners of the business. They will declare their taxes, and we owners, we are supposed to declare our income tax returns as well. So when you don't do that, I always find most people failing to get tax clearance certificates, yet it would be an easy thing to do. Your business is compliant, but you as a director, you are not compliant. You are not filing returns. You will not get a tax clearance certificate when you are going for bidding or when you are getting loans and you want a tax clearance certificate, it becomes hard. Another mistake, we always tend to file pay as you earn for our employees, and we declare less salaries vis-a-vis what we declare in the National Social Security Fund. The systems are now interlinked. Whatever you declare as pay as you earn for your staff, it should be the same as what you declare in the National Social Security Fund. Otherwise, like I've told you, the information is interlinked. From both sides, they are able to know that your salaries are this amount and you have declared less either here or there. So always make sure that your gross amount you declare for your staff salaries is the same that you declare in the NSF side. Otherwise, you will be assessed unnecessarily. And also, you should know that where it comes to staff, there is no saying that these are casuals. These ones come once in a while. They are not permanent workers. They are all staff, and they are supposed to be on payroll, and they are supposed to be paying taxes. They are supposed to be paying pay as you earn. You cannot separate and say these are casuals and not permanent. So long as they are earning and they meet the threshold of pay as you earn, they are supposed to be paying pay as you earn. The threshold is 235,000. If you are earning above that, you're supposed to pay as you earn. There is this tendency where I have seen it in some NGOs where you find they have staff on the, they also have these ones they call independent consultants. Someone who offers like cleaning service. They employ him or her as an independent consultant, not a staff or not an employee. Whatever consultants they do, first understand if they meet the criteria of being staff. If someone is saying that he or she is a consultant, do they prove to you that they are consultants? Are they registered and do they pay taxes on their side? Because what is happening, someone comes and he says he's a marketing consultant in your organization, and you pay him the money and you withhold 6%. And you don't put that person on the payroll, you only pay him the money and you withhold 6%. And you find that this person is not having any business, is not declaring taxes where he is. If you are a consultant, you should have registered premises, you should have a license for the services you are offering, you should have trading license, you should be declaring taxes to be considered a professional person. But otherwise, this business of saying you are an independent consultant and they are not putting you on their payroll, if they come to know you, and of course they will know you because when they withhold that 6% and remit it to URA, URA is always interested to know who is this consultant. Is he or she declaring the income tax? What are his sources of revenue? So you find you are inviting the tax authority to follow you, and in the end they invite you back to go and they register you as an employee. So always avoid making people as consultants when they are not, because you don't want to put them on your payroll to start paying like other staff members. It is very common and it is bringing a lot of issues to most taxpayers. When you are withholding on income, there are people we call professionals, or these legal expenses. We have legal expenses, we incur professional expenses. All those expenses, you are supposed to withhold 6%, regardless whether you are gazetted to withhold or not. On some goods, if you are not gazetted, you might not withhold. But each and every business, if I come and I offer you my services as a tax consultant and you are paying me, you are supposed to withhold 6%. It doesn't matter if you are gazetted to do it or not. For legal and professional services, it is a must for everybody to withhold. If you don't withhold and you pay me all this money, you will have broken the law. You are supposed to make sure that you withhold from me the 6% and you remit it on my behalf. Always take note of legal and professional fees. Don't always say, for us, we are not supposed to withhold. It is for only big companies gazetted to do so. Another mistake that is very common today, it is invoice trading. It is very common with taxpayers who have VAT. Invoice trading, what does it mean? It means you are purchasing air to benefit on the VAT input. When you realize that this month your VAT payable is higher, you buy an invoice that has VAT to reduce on your VAT payable. You have to be very careful. So many ways that you will be caught. There are so many ways that you will be caught. Because remember, you are going to keep on getting those, whatever you are purchasing and you are invoiced, and you are not issuing out whatever you are purchasing. So stocking to your premises only, whatever, if you are in trading, whatever you are purchasing, you are supposed also to issue it out through a freeze and make sales. So for you are buying things, you are being invoiced, but nothing is coming out. They will look for you. Or someone, there are many buffers these days, they will just give you an invoice and they disappear. They will never declare. I have been representing taxpayers to URA having a lot of assessments because someone they were trading with eventually disappeared and they can't trace him. So if we have purchased a lot of stuff from that kind of business and the business is no longer in existence, it will be difficult now because someone is not there, he is not declaring taxes on their part. It will affect you yourself as well. You will not claim that for me, I am clean. Here are the invoices I have purchased from this person. If he is not declaring, that is his problem. It is also your problem. You are supposed to deal with the genuine people. And if that person is not declaring, it means the authority, which is URA, is not sure if that person was there or not, or you faked the invoices yourselves. So always deal with the people that are genuine. Otherwise, it will be a big, big problem. I don't know if I have some questions so that I can answer them.
Yes, we do. Yes, we do. And one question is from Clara. She says that she registered a company in 2020, but she didn't get a TIN. And now, and she has also not been operating, but now she wants to start operating. But now when she started operating, she has been asked to get a tax clearance form. What should she do?
Okay, thank you. This is very common. Every day I handle such cases here. There are some who open the TIN number, they also don't use it, and then they find even assessments on their TIN numbers, and yet the company did not start. Maybe they lacked capital. I don't know if for her, if she has any assessment already on the TIN, or if, I mean, you said she has no TIN. If she has no TIN.
She did not get a TIN.
Okay, if she has no TIN now, it's okay. She can apply and get a TIN because, like I was saying, it's important to have a TIN. If you don't have a TIN, the registration is still incomplete. And you cannot get a tax clearance when you don't have a TIN. So it means if you try to do some bidding anywhere and they ask you a tax clearance certificate and you don't have a TIN, you can't get. Tax clearance certificate comes through the TIN. So the first point now to do is open a TIN. After opening a TIN or register for a TIN, make some small payment. It's like a commitment, like a provisional. You make a small provisional, you pay. Even if you pay 100, because your assumption is that you have just got a TIN, you are going to start business, you cannot declare too much, you are not yet sure for the business, but you have to commit and pay something, and then you are able to get your tax clearance as fast as possible. That's what I can advise her.
Thank you so much. Now, the other question is about VAT. Can you pay VAT when you're not VAT registered?
Yes, yes, you can. We always pay VAT. Whatever you purchase, you know there is VAT. And that VAT you pay, you will not benefit if you are not VAT registered. You will find that in most cases, as you purchase, the invoices they give you, if you are purchasing from people who have VAT, for them, they will bill you that VAT. And for you on your side, if you are not VAT registered, you lose. You have paid VAT to this business, but on your side, you are not VAT registered, you can't claim what you have paid there. But if you are VAT registered, whatever you will have paid while purchasing, you are attributed to claim back that VAT because you are also going to be paying VAT on your side. So you have to pay VAT. You cannot escape that one.
Right. So that answers the second part. So that means if you are not VAT registered and I pay VAT, I cannot benefit from the VAT I paid.
You cannot benefit at all.
So does that mean it's
And
okay, even if I'm a small business, to just be VAT registered so that I can claim? I can keep claiming?
yeah, you have to first make an analysis of your business operations and see, am I going to benefit if I register for VAT, especially if you are having a lot of purchases. If you are purchasing a lot of things that have VAT, you are advisable to register for VAT. Because in the end, you find you have paid a lot while you're purchasing, and a lot of money is lost through these purchases. So you can register and be compliant with VAT so that you benefit.
All right. So what I've understood is it should really depend on the kind of business that I'm running, even if I have not reached the threshold that the URA has put in place, I can still register depending on the kind of business I'm running. So if in my kind of business, I'm buying a lot of goods, maybe I'm in manufacturing or something where my inputs have a lot of VAT, I must register so that I can benefit. So now to do that assessment, are you able to help me, you as Pius, are you able to help me do that? I don't know, is that what we call tax planning? Or is that something
Yes. You see, when you are starting a business, you have not met the threshold. The business is starting, but you are in manufacturing and you know you will meet the threshold by all means. You have to meet it. So you will not need to wait until the 3 months. Then you determine that now I have reached 150 over 37 million. Like the requirements say that you should have a turnover of 150 million a year. You are sure that you will meet the threshold. You don't have to wait. After all, it's a requirement. It's a requirement to register freely. You can register freely and you attain your VAT.
All right, so that means I don't have to have the limit of 150 million to be able to register for VAT.
No.
All right. So now there's another contention of people who are okay, they reach the 150 million, we should register for VAT, but there's also a problem. Like if I register for VAT, that means I have to collect it. That means I have to pass it on to the customer. And then you're like, what if my customers are going to go to the competitors who are not registered and asking for VAT? What happens then?
Thank you.
Advice.
Yeah, this is very common, and it's still a big challenge, because you find you are going to comply, you are VAT registered, you have competitors who are not VAT registered. And of course, if you are VAT registered, your prices always go higher, because this VAT you add on your product will increase the product compared to your competitors. What happens is that this is still a problem, and that's why you are seeing the government is putting on a lot of emphasis going down to Chikuba there to make sure that everybody goes on board, so that everybody pays their share of the tax. It is still a problem, but also another problem I am seeing is that most people, they don't know how to cost their products. You find even when they are putting VAT, they are putting it even on their revenue they are supposed to be earning. When you are making your VAT, or when you are adding VAT on your product, you have to first make a proper costing analysis and see, because this VAT, you are collecting it on behalf of government. You are collecting it from, it is not supposed to be your burden, you the business person. Otherwise, if you cost it wrongly, you find you are working, you are not seeing any revenue, all the money is going to URA, and all these people complain, we are working for taxes, and you find in most cases, people don't always know how to do their costing, so that as you collect this VAT, it should not be affecting your revenues at all. It should be a cost, or it should be the money that you collect on behalf of URA. It should not be your money that you are getting from the business to pay. So collecting costing is always important, but also when you are VAT registered, you have to make sure that you deal a big number of the transactions, or the business people you deal with should be also VAT registered. If you are VAT registered and you deal with people who are not VAT registered, you should do it as a last resort. But you must look for people that are VAT registered, transact or make business with those ones to benefit fully from the VAT. Thank you.
Thank you so much, Pius. And then there's a question here about the VAT and the invoice on FRIS. What is their relationship?
Repeat.
What's the relationship between VAT components in a receipt and in the invoice on FRIS? What's their relationship?
The relationship is that, like I had explained, when you are VAT registered and you are raising an invoice on FRIS, after generating that invoice, the first feature that will come on top, the invoice will show tax, the word tax invoice. And then when you check down, you will see the invoice is separating the figure. It will show you the VAT figure and also the gross figure, and also the figure without VAT, then the VAT figure total down there. So it separates the two. But if you are not VAT registered, it just brings a block total figure. And at the head, it will not show you that this is a tax invoice. It will show an e-receipt, the word e-receipt. So when the VAT component is shown on the invoice, it means this person has billed the invoice, and that invoice, whoever is going to pay is going to pay the VAT because it has been charged to that person. Okay.
All right. I hope that's clear. Thank you so much. Then this is a question, and I think it's about there's a confusion between individual teams and business teams. So if I am running multiple businesses, should I use one team or different teams for each business?
No, you see, those are individual businesses. If they are individual business, however many they are, they have to be under one team. And it's if you're having more than one business, not companies, business where you go, you register a business name, it will be on your team. And that's why it is always important to keep recording such that you know each source, the revenues you earn from different sources of income. And when you are declaring your income tax, you declare your returns from a good point of view. You should be having all the relevant information from all those different businesses. You will use your individual because they are all individual. They are all your businesses. They are not independent that you give them a separate team like a company. If it is a company, then that is a non-individual. You have to get a separate team for that company. But if it is a business, it will be on you. It has to use your team as a director. So you can have companies, give them their team numbers, but you can also have your businesses. And if it's like that, when you are declaring your returns, you as a director, you have to make sure that you will declare these taxes from the revenues you are earning from these individual businesses, and also the revenue you earn from your company there. So that's why they always make it compulsory for directors by law to also comply and file income tax returns because they have different sources of incomes. Thank you.
Oh, just one more thing I just want to clarify again is one is if I am selling a product, what you're saying is because of the introduction of VAT, I need to go back and look at the pricing of my products, right? Then after I relook, we need to relook at the pricing of our products. And then after we look at the pricing of our products, we can then add VAT on top because the VAT being added on top is you are passing it on to the customer to pay the VAT because it has to be added on top. So it shouldn't come from my profits. It should come from addition to the cost of the product. Okay. Thank you so much.
Yes.
Then I have another question. You kept saying that between my accounting books and my books and URA, I need to keep checking. What is the advice? How long should I keep checking? And the other question is, if there are people who have already declared that they have done business with me, is it possible to know from my URA portal that people have already declared to URA that they have the third parties that they have transacted with me? Or is it something I don't have visibility of yet from URA right now?
Thank you, Madam Primera. Thank you. Now, we have a good opportunity now that the URA has improved their system compared to last year's. Now you are able to know through even your email, you get a notification. If someone has withheld money from you, the moment they pay it to URA, you get a notification on your email. And you are supposed also to go on the portal and see if that money has been reflected. Because remember, we have different withholdings. They can withhold your money on income tax, or they withhold from VAT. So you have to check on the portal because that money is reflected. If it is withheld on the VAT, it goes on the column of the VAT. If it's on the income, you also check on the income tax ledger and you find your money there. You are supposed to get a certificate for whatever money they withheld from you. And that certificate, if you want it urgently, you can easily go online and you print it out yourself. Because we always want those certificates also when we are filing your income tax return. Without that certificate, then it means that money is not valid. There, it must have a certificate, and the certificate must have a number, and that number is quoted while filing the income tax return. So every month, anytime you feel you have transacted with URA, you can log on and you check how you are transacting with URA, all transactions, all the payments, whatever you have done with URA is reflected there systematically. There is no way you can say that they are cheating you or whatever. You can reconcile. They have a good reconciliation team that can help you understand how to always navigate through your ledger with URA. It's really very helpful. And if you neglect it, sometimes you can find you have a lot of mismatch between your records and URA, or they assess you and you are not aware and you don't know how these assessments are coming, and you start complaining. So always navigate and understand how your ledger is. It should be not demanding you. It should be clean, in other words. It's important to keep on checking. Okay, thank you.
So thank you, Pius. So what I've understood is if someone has withheld from me when we are transacting, I need to confirm that it has actually been remitted to URA. And I need to receive that certificate for myself so that I can use it when at the end of the year. Okay. So thank you so much for that. I think the last question you had tried to answer it was about dealing with institutions that are not able to give IFRS. That one you said we should only deal with them as a last resort. It shouldn't be the default, right? So thank you for that. And our 1 hour has come to a close. Thank you very much. I don't see any other open questions. So I have put Pius's number and email on the chat. Let me do it one more time for any new person who may have just come in. So I have put it there. Please reach out to him. He's one of the best people, and especially if you are just starting that business. Don't wait until there is chaos. Please reach out to him and tell him, show me what I should do now. And if you're already there in the business, please reach out to him and say, how can I be able to plan better for the new financial year? It has just started. And that's why I wanted to have this session now in July, so that we can plan well for the next year. I had to learn a new word, which is tax planning, so that I'm able to plan for tax. Can you imagine? If I'm doing business planning, I need to also do tax planning. That was new for me, but it has been a lifesaver, so that you're not in shock at the end of the financial year about how many taxes you have to pay. Thank you very much, Pius, for spending the last hour with us. And thank you so much for everyone who has come to the call. I'll be sure to share the recording for this video. Thank you. Thank you very much. Thank you so much, Pius.
Thank you.